Everyone asks me, Troy, I want to buy a home, but the rates are so high. Today, I'm going to show you rates that make sense to buy a home today. Today, we're going to go over those articles, and we're going to compare rates, as well as we have a CNBC article about the home prices in September. Welcome everyone to Real Estate Daily. My name is Troy, and every day we go over the latest news in real estate, mortgage, and the housing market. Now, before we jump into it, let's begin by hitting the like button. Hit that like button and then hit that subscribe button. It helps out the channel, promotes it out there. I want to show you why rates are a lot lower than what the media is telling you and where to find those rates. Let's jump into it. Now, before I go over all of this, when I check out rates, and I don't care what it's from, I don't care if it's Rocket Mortgage or it's a broker or it's a Loan Depot, there's actually hundreds of mortgage companies out there. What I have found out that the credit unions are by far the lowest rates that are out there. Now, they're significantly different than those bigger companies. Why? Is because they hold their paper. Now, most of them hold their paper. Now, how are they holding their paper? Well, they're using deposits against home loans. And most of them do that. Not all, but most of them do that. Because of that, then they can set their own rates. Now, if I'm out here and I have buyers coming to me and they're like, Troy, it's way too expensive. I don't want a rate in the high sixes or low sevens. I say, hey, first of all, I know that the credit unions are much, much cheaper. Now, how do you get qualified? I am first saying, before we jump into the rates that I'm going to show you today, that each one of these credit unions have different qualifications to become members. And because of that, please read those first. But these rates are where you want to be. And absolutely, I can see most everybody jumping in and buying homes. It makes sense, okay? It's not the media that's out there telling you rates are so much higher. So let's jump in. The very first company here is Schools First. Now, obviously, to be a member, there's so many different things that are out there, so many different qualifications, but please check it first. But let's go look at the rates. Now, if I roll down here, 15 and 30, they're lower, but what I would be looking for is some of those ARMs, right? And the ARMs make sense. So you have all different types. I jump into adjustable rates, PMI, savings. Oops, I kind of went right by it. Where are the ARMs at here? Okay, adjustable, there we are, right here, I'm sorry. So you have the 7-1 ARM, the 5-1 ARM, and the 5-5 ARM. These are the ones I would be looking at. Look at these rates. Now, I like Schools First because it goes over every little thing with you. If we look at the interest rate on a 7-1 ARM, it's 4.625. How many points does it cost to get that? It's no points. And then you look over all the way to the end here and it tells you what each set of payments are per thousand. I really like this. 5-1 ARMs are at 4.5%. Man, these are fantastic. 5-5 ARMs, meaning every 5 years it adjusts. So if you look at it, the first 5 years, it's $5.14. Then it per thousand, then it's $6.24, and it's 7 and 8. At this point, when you're looking at 5-1s and 7-1s, my strategy would be going over and figuring out that I'm going to refi within that time. Now, I know that tonight Ryan is going to jump on, my business partner, onto Instagram. He's going to go over what some of the projections are on, is it Facebook? Facebook at 9 p.m. He's going to go over projections on what certain huge companies out there and media outlets are looking at interest rates next year. They're all predicting rates going down. This is what I'd be looking at right now. What is the factor that would get me to buy a house today? Well, because the housing prices are going down because of interest rates going up. If interest rates go down, what's going to happen? Prices going up. That's what's been happening for the last 3 years. I would be absolutely looking at this. Next credit union, this is the LA This is Los Angeles Federal Credit Union. We come down here and we look at 3-1 ARM, 3-1 ARMs with fees. It's 4.5%. So it's a little more riskier in the respect that you're planning on refining within the 3 years, or you're going to turn around and sell your home within 3 years. So it's at 4.5 with no discount points. Look at the 10-1 ARM. I like this at 4.875 with no discount points. The term is locked, for 45 months. So these are things that I would be looking at. I'd be going to credit unions. I'd go, okay, how do I qualify? Let's go over another credit union. Here's the Orange County Credit Union, right? Here's a 10-1 ARM. The rate's at 5.87, 7-1, 5.625, 5-1 is at 5.25. This is pretty good. This is actually fantastic. These rates, even though they're still in the 5s and we saw others from the 4s, it's a little easier here in Orange County because Orange County Credit Union, some of the qualifications is just being an absolute, owner of a home or having your address here in Orange County, So again, check these out. Now, here is the first Norcal Credit Union. This is one of the credit unions that do not offer, ARMs, but their rates are still lower. I mean, they're still lower. And this is where I'm telling you, if you're out there and you're on the sideline and you're looking at homes, when is the best time to look at homes? Well, obviously when the prices are going down, but the prices are being suppressed because the interest rates are high. But if I can get an interest rate that makes sense for me right now, it's the best time to buy. It's taking two synergies and putting together and making it. So in the next 60 to 90 days, when rates are high and a lot of the public is looking at inflation numbers and elections and not really looking at homes, this is the moment. Now, inventory is down. I understand that. But a lot of people are sitting on the sidelines. This is the time to buy. This is really the time to buy. Now, what do I project in the first quarter and second quarter of next year? Well, if the Fed hesitates or pivots, what's going to happen? Interest rates are going to go down. When interest rates go down, competition for homes jump in. If I had the choice right now, would I want to go and compete with a lot more people in the first or second, third, fourth quarter of next year or 2023? Or would I rather get something that's on the down where I can actually think that I can offer less or even have the seller pay for closing costs? In fact, even buying some of these 2-1s down or even 3-1s or 7-1s, buying down the rate even further for me. Think about that. This is the time to buy, and the place to buy is credit unions if you can qualify or if you can become a member of that credit union if you qualify for that. Next article here is CNBC. Today it came out. Home prices cooled at a record pace in August, SP Case-Shiller says. Now let's go look at the key points. I always say that. I mean, record pace. Come on, guys. Says home prices are still higher than they were a year ago. So now we're still significantly higher. Let's look at what happened year over year. It says prices in August were 13% higher nationally compared to August of 2021. Anyone who bought a home a year ago, Case-Shiller saying you're up 13%. Guys, where is all this gloom and doom at? Doesn't make any sense. 13% year over year. You would put, if you knew this a year ago, you'd put everything you could into this. You put it into a bank account that would give you 13%. You'd give, if a stock for sure guaranteed 13%. Come on. This is ridiculous to go and look at saying it's at a record pace in August. That's just ridiculous. It says that's down from 15.6 annually in the previous month. So it's down 2.6%. I'm still way up on my money. It makes no sense to go shill this that bad. Not shill it, FUD it that bad. So, and then let's go to the bottom line here. What are interest rates doing? And this is yesterday, and I pulled up the data on these credit unions yesterday. So what was the data yesterday from Optimal Blue? Look at 30-year conforming went up 4 basis points. It's at 7.16% for conventional. Now look at 15-year. It's just ridiculous. It went up 21 basis points. It exploded. 30-year jumbo went up 9 basis points. But the 30-year FHA is flat. I still predict somewhere in the middle of next month, by the middle of next month, we'll be over 7% on FHA. There will be no questions. Guys, I'm hoping that this video will give you some kind of optimism about this mortgage market. And it's not all about calling Rocket Mortgage or, all these big companies. They're looking at profits. Let's go at a company let's look at a group of banks that are going to go after your business, and they're way more competitive than the major guys. Credit unions. Guys, if you have any comments, please leave them below. I'm more than happy to answer them for you. But make sure that if you are on the sidelines, this is a time where I would go and get qualified and see if I can become a member of these credit unions to make sense of all the real estate purchases that are going on right now. You guys, thank you for joining me today. You have a fantastic day, and I will see you tomorrow.